Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and currencies in focus right now. And it has been an year, the 2023, where we've seen a lot of volatility marred by what was happening in sense of geopolitics, also with the US interest rate side. But the expectation is that as we get into 24, there are going to be at least 60 global central banks cutting interest rates in the first quarter. And in total for the next year, there could be 152 rate cuts as well. Well, that has clearly impacted a lot of currencies. But what is the sense going forward in the next year is something we will discuss in detail with Mr. Amit Babari of CR Forex. Mr. Babari, hi, thank you so much for joining us. And the last couple of days for this year, clearly, and it has been quite a year when you look at all those fundamentals and factors. I will want to start with the Indian rupee itself. We've seen an all-time low in 2023. We've recovered a bit from there, but we are closing the year marginally on the lower side. What's your sense on what rupee did in 23 and what's your sense for 24?
Right, if we compare 2023, a rupee has been performed relatively better as compared to other currencies. Basically, it was more trading in a narrow range between 81.5 on the lower side and 83.50, 83.40 on the higher side. Probably in the year of 2024, we expect rupee to move towards 82 and lower than 82 in the second part of the year. There are few reasons why we expect rupee to appreciate in coming years. The first reason is dollar index. If you see dollar index, which was trading at 114 at the beginning of the year, has moved from 114 to 100 kind of a level. But relatively, rupee is stable, trading at the same level, 83 and 83.30. So we expect rupee to move towards, lower levels of 82.5 and 82. That is reason number one. Second reason is we are seeing that a lot of flows, tsunami of flows is going to come in Indian equity market and FDIs. First of all, 25-30 billion we're expecting in JP Morgan bond index. Apart from that, equity will be doing good. Whenever there is a rate cut cycle in the market, we expect flows to come in. So we are expecting money to come in Indian equity market, Indian bond market, and apart from that, we are expecting FDIs to also come in. So a lot of flows are coming in. That is the reason number two. Third, other Asian currencies have become stronger. USD JPY, which was trading at 152, we're currently trading at 141. Expecting USD JPY to move much lower towards 135 and 130 in 2024. Similarly, Chinese currency, which was trading at 7.35 against dollar, currently trading at 7.10, expecting it to move much lower towards 6.95. If all of this happened, then there are higher reasons why rupee should appreciate towards lower level.
So Amit, would you say that 82 is going to be a best case scenario for the next year?
82 is the first target.
Okay.
If we break 82, then higher chances is that we can go much lower than that.
And what is your worst case scenario?
83.50, 83.75 is a worst case scenario. So we are near to top at this point of time.
All right, fair that. Dollar index, as you said, we've come down from 114 to almost 100 kind of levels right now. It's trading at a 5-month lows. We've seen 3% of a decline in this year until now. How are you projecting that one for 24?
See, basically, 2022 was a year where Fed had tightened, the interest rate, have sucked the liquidity from the market. And then Russia-Ukraine war have emerged in the second part of the year. Because of that, dollar index rallied from 90 to 114. Now we are expecting the reversal to happen. Fed is not going to increase the interest rate drastically, that we all know. Probably the Fed is one which is going to decrease the interest rate at the fastest pace as compared to Europe and UK. There are 2-3 reasons why Fed is going to do that. A lot of people in the market is talking about inflation. But apart from that, there are main 2 reasons why Fed is going to be more dovish in terms of decreasing the interest rate. First is the debt level. The debt level is at $33 trillion. at current interest rate scenario, they are paying close to 1 trillion of interest rate. Basically, they will try to reduce that. Second, US is going for an election next year. General tendency is that whenever any country goes for an election, they're going to be a little more dovish as compared to other countries. So we are expecting Fed to decrease interest rate drastically. If that happens, then dollar index is going to move towards 98.5 level. Second level will be 95 kind of a level.
Okay.
Apart from US economy, we have seen initial recovery in Europe and UK, which is also a negative point for dollar index.
Amit, you also mentioned about the Asian currencies, and that's another thing that we will continue to watch as we move forward into the new year as well. And yes, most of the Asian currencies seem to be closing the year on a positive. I mean, if you look at the commodity currencies also, Australian dollar, New Zealand dollar are trading at a 5-month highs. Chinese yuan seems to be doing well. So it seems like a better market. And as you mentioned, the equity has done quite well. That in turn also has been supportive with the kind of buying and excitement and confidence that we've seen returning back into the markets. How and what else apart from the US Fed and the dollar index would you want to watch out for in sense of a wild card next year now?
There are a lot of positive factors for Indian economy.
Okay.
Growth is higher, current account deficit has reduced, and we're expecting it to reduce further next year. And all green signals what we are getting from Indian economy. And RBI has been doing a fantastic job from last couple of years. So all of this positive indication are indicating that, whenever the economy is doing good, whenever the flows is going to come, upside is limited for the currency to get weaker. There are higher chances the currency get positive. One concern what we have at this point of time is that you've been mentioning that in your channel on a regular basis that commodity will be on an upside momentum. Gold, we are looking at a higher level. Crude can also get escalated. Because of that, there might be some pressure on the trade deficit number. But overall, we are expecting a good close in the coming year, which will be a positive for the rupee. One interesting point to note at this point of time is that generally, when rupee is trading in a range, exporters and importers will get complacent. So the idea for any exporter is that they should not get complacent, or they should not have a regency effect in the mind that from 72 the currency has come down to 83. We should not hedge as the premiums are low. What we are requesting all our clients is that they should hedge maximum within their prescribed policy and do not get complacent. Importers can relax a bit. They should not get worried that the currency is going to move towards 85 or 87. They should hedge only the near-term import. So the idea for exporters is that they should not get complacent. They should hedge because the flows are going to come. One more data point I would like to give you. In 2014, January, currency was trading close to 68. And in May 2014, currency moved towards 58 kind of a level, 58.5 kind of a level. Because between Jan 2014 till May 2014, we have received inflows close to $15 billion. 2019 also, rupee was trading at 71.5 kind of a level. It came down to 68.3 kind of a level by May, and we have received flows close to $12 billion between Jan and May. We are expecting same kind of flows to come in. If that happens, then probably 2024, again an election year, we might see some kind of appreciation in next 4 to 5 months.
All right, Amit. So not an year that's going to be without concerns, but a lot of positives as well coming in, and the expectation that we could be looking at another appreciative year for the rupee, especially given the fact that it's going to be an elections year as well. So quite a bit of a support coming in for the currencies there. Thank you as always. Pleasure talking to you. So well, that's the view about currencies. Some more positivity continuing or coming your way.